So I'm currently up 3% on a Euro-USD long trade that I placed last week. I'm now going to break that trade down to why I placed the trade and what the trade has done since then. My style of trading is a day trader. I hold trades for anywhere between a day and about 4 days. And we would place anywhere between 4 and 8 trades per month. So you understand that I am a bit of a slower paced day trader, and we don't need to be in a setup every single day. So Euro-USD long. The idea of this trade setup is for a more high risk to reward ratio on the trading strategy, and we use support and resistance. So we start weekly time frame. I'll break it down. We do a weekly top-down analysis and top-down breakdown, and that's the easiest way for me to show you how and why I place the trade. We always have everything on a trader's checklist, which you will find inside the Limitless Trading Club. But a trader's checklist keeps your emotions out of your trades and also gives you data for previous trades you've taken if you need to make any adjustments to your trading strategy. Taking a lot of you have already got your own trading strategies and are already traders. And if you don't journal down, that's what happens when you start adjusting your trading strategy with just emotions. It becomes more unprofitable than it already was. So to make a profitable trading strategy, you just need data and reps. So starting with, we are looking for support and resistance. Mark them out on the weekly time frame. Need a minimum of 5 touches to make something a support and resistance. What do I mean by 5 touches? 5 touches, at least a candlestick has touched it 5 times with a rejection. Once here, twice there. We got 4 or 5 times in here. You can see we've got a clear straight push, but we've got a double rejection there. Coming over this side, we had another rejection here. And then coming right over here, we've got multiple rejections coming through where current price is. Same with our resistance zone up top. Again, 1, 2, 3, 4, 5, 6, 7, 8, 9, and our final one, 10. So we've got multiple rejections of our support and resistance zones, and I mark them out in a grey line. But main thing to think is that actually a zone. So anything to do with trading is just an area or a zone, and it's not going to be perfect. This is trading and real life movement. So it needs to be a zone, not a line, but it keeps it clean and clear for your trading. So we're looking at this setup itself. It was a long trade and we're coming down to the daily time frame now. We know we've got support and resistance. We now need a piece of market structure rejecting either a support zone or a resistance zone. And then we're trying to trade from that onwards. So this is a MSB trade, market structure breakout. If you want to know what that is, go and watch last week's video, and that will tell you exactly breaking down this trade and the trading strategy. If not, join the Limitless Trading Club and you can have it for free, both trading strategies. What we're doing is we're looking for a pullback and a rejection. So rejection here was price come back down to test the support zone that we've got marked here in the grey with the multiple touches, and we're now looking for a piece of market structure. Market structure is a pattern in the market on a higher time frame that will show us where price is going to move to next. And they can be a double top, double bottom, inverted head and shoulders, triple tops, flag patterns. You all do them, you all trade them. So with this here was a inverted head and shoulders on the 4-hour time frame, and you'll see that clearly now. I have marked it out for everyone to make it nice and simple. I always mark this out for any of the beginners and novices inside the Limitless Trading Club. But we've got a shoulder, head and shoulder, so right shoulder pattern. They're rejecting the support zone and also the daily 50 EMA. So this strategy uses the 50 EMA, which is a moving average of the 50 days. And same with the 4-hour, over the 4-hour, last 54 hours. Candles is what it uses. And we use them as barriers. So you can see it worked perfectly here. Price pulled up, pulled down, created the head, pushed all the way up and created a new higher high. It then pushed all the way down to reject the daily 50, and that gave us the right shoulder, and that is where we actually caught the entry from. So when we drop down on the time frames, we're going to fill out the sheet as you go. So I'll show you the sheet now on the Limitless Trading Club so you understand exactly what I'm talking about. Bring up here, this is the trader's checklist, as you will see, and we just need to fill that out as we look through the trade and as the trade progresses. Sometimes you might get halfway through the sheet and the trade not be valid. So then you step away from the trade and look for a new setup the next day on another currency pair on the next week. So we put currency pair in, key level it was tested, and the structure, and also the style of strategy we're using out of the two that I have. And this is the MSB trade. Now we're going to start dropping into lower time frames. We're looking for EMA crosses. And we're looking for retests into structure and into the Fibonacci. And the idea of that is there's just patterns that over data, again, data, that we have worked that if you have an EMA cross on the 4 hour and the 1 hour time frame, the trade's more profitable. Yeah, you're more likely to go the direction you want it to because of them two confluences. Same then with the pullback is to make sure that price is exhausted enough that you're not going to enter and then get taken out of the trade by 2 or 3 pips, and then the trade continue in the direction we was wanting to and hit TP. That's then when you get emotions in the market, and we want to keep emotions away from your trading. So what we did, first of all, we looked for a pullback, and that pulled back into the daily 50. So we can add that to our sheet. EMA retest or structure retest was a daily 50 EMA. Then from there, we went to Fibonacci, and we pulled that from the bigger push down on the previous time. So Fibonacci is pulled from down here, and I always pull Fibonacci from the start of the bearish or bullish run. Obviously, we're looking for a bullish movement here, so we're going to start from the bullish run. So pull all the way up to the highest of the high, and then we can let it come all the way back, and you can see price pull back, not at a minimum of 382, but to the 50% fib, which is beautiful. That's what we want it, 50%. So what it's saying is, of this first run, the first push, price then pull back 50% before then looking to push to the next run. Yeah, and that's what we're after. We're after one run, pull back, next run. We're trying to catch that middle push of the 3 push Elliott waves. And when we come down to the 1 hour time frame, following from that, once we've got that marked out, fill the sheet out again. Yeah, we've got 50% fib on a pullback. Lovely, beautiful. We need that previous data. We've got that. We then go into the candlestick confirmation, and that is the trade is placed on. We use candlesticks to tell us when price is just about to roll over, then we grab the entry nice and tight. So sometimes this is why we don't go too lower time frame for entries, because you'd have to be sitting on the charts. And for the style of trading, this is day trading, we don't want to be sitting on the charts 24/7. We want to be able to do an hour in the morning of analysis, hour back testing, and then just check out throughout the day if you set alerts or set alarms for when the trade is near enough ready, and then you can just place the trade every hour. So we can drop down to the 1 hour time frame and look for a nice entry. You can see we've got the 1 hour time frame EMA cross here, price pushed all the way down, and then we had, not quite on the 1 hour time frame, an engulfing candle, this one here. We did get a double engulfing candle, but not what I wanted to take right there. So what I did then was went to the higher time frame, back to the 4 hour 50, and looked for an engulfing candle on a 4 hour time frame. Did mean I have to be patient. I had to sit on my hands and not place any trades, yeah. I had to wait for another 2 hours. And when it closed at 10 a.m., which is what the candlestick is, 2, 4, 6, 10, 2, 6, 10, losing it. We then had our 10 a.m. entry, which was an engulfing candle. So you can see that there, the engulfing candle itself. We have the body. The body is bigger than the previous body. That is what's giving us an engulfing candle. So that was the entry. Bang. In we went. Calculated our stop loss sizings for the currency pair we was on and for the stop loss pips we were in. Lots went in. Trade was on. Show you the trade now. Trade currently. We're going to have to do a little bit of zooming in here. Where's the MT4 on the main live account? Just pulled back a little bit now, but we are currently at 2,300. So to about 2.5% where the trade currently sitting is for a 100k trading account. And that's what we are on the live account itself. Got that? All good? Beautiful. So we can see that. And that's the reason we placed the trade. It met criteria, yeah? We didn't do anything different. When you're profitable as a trader, it is just the same boring repetitiveness stuff, yeah? You check analysis, you check for support and resistance, you check for structure, you check for pullbacks, you check for EMA crosses, you check for entry, you enter the trade. It's stop loss, it is TP, you get taken out at entry, it's just the same stuff back to back. But that's what's profitable, and that's what makes trading easy and enjoyable, because you don't want to be on the charts all the time. You just want to stick to your trading strategy and make it clear and simple. So that's how we entered the trade, why we entered the trade, and where the trade currently is. Let's have a look at the movement after we entered the trade, because every trade will be different. Some trades will go straight into profit, like this one kind of did. Some will go into a loss before pushing up, and some will just sit around entry. And you have to understand that once you've placed the trade, you need to set and forget, yeah? You don't need to be checking it every 15 minutes, every hour. Once you've placed a trade, you should probably be checking it every 4 to 6 hours if you're going to. I normally will forget about a trade and then go, oh shit, trade's on, what was that like? If we like, say I checked it in the morning, I done analysis, and then we went out filming today, then we go to the gym, and then go, oh, actually, get back, trade again. So try to set and forget, and that really gets your emotions away from your trading, and you will enjoy your trading a lot more. So movement, 1 hour time frame. Let's have a look. We entered the trade in a 4 hour time frame, but let's look at the movement on a 1 hour time frame because that's the best candles you can see. So price, as soon as we entered, did have a little bit of, let's say, not movement, but consolidation. You can see price here on the candlesticks. We have got a lot of dojis and some high tests. Price then did push up into about 3 or 4 pips in profit by the looks of it. Let's have a quick look there. Nope, but we got up into about 15, 16 pips in profit before price pulled back to entry. And that is very good. I want to see that, because if you put stop loss to entry too soon with this trading strategy, you will get stopped out. And that's what happens here. You can see it moved into profit by 0.5%. So you'd have been 500 quid in profit. If you would have put stop loss to entry, price would have pulled back and just taken you out of the trade at break even and then pushed straight into profit. So my rule of thumb really is I will only put stop loss to entry at plus 2%. Yeah. So when price got to 60 pips, in profit or 2%, then we would put stop loss to entry, making this trade risk free. The only time I will ever change that rule is if I've got an EMA in the way. So if we had a big EMA and I moved stop loss to entry before price got to the EMA, or if we have a really set of high news coming up and I'll put trade risk free. So if we're in 1% profit, I'll put it risk free. And if news then does change direction quickly, we don't lose anything on the trade. But if it stays where it is, then it's a bonus and we can keep the trade as it was running. So price then pushed straight up to, well, near enough 3% profit straight away. Yeah, and just over 90 pips there. 100 pips it just hit over. So we was just over 3% in profit from the first major push. Yeah, so that's very good. Could have had a nice 1 to 3 there and taken that. We set this for a 1 to 5 because that's what the trading strategy wanted. And we just now going to hold that until it hits either break even or it hits TP. Price then pulled back twice. Double pullback, that's a good thing to look for, and this is where the MSBC trade would come in, but because of the time frames being a Friday afternoon, we didn't enter. But as you can see, I've got it marked out there. Price pushed up. This is the MSB market structure breakout. This is the breakout push. We're now waiting for the continuational push. So pull back once, it then pushed up, and it pulled back twice, and it tested the 4 hour 50 EMA. If we do that, I pushed it up there. Pushed 4 hour 50, you can see it come back, clear the screen up. Yep, it rejected that. That there would be a lovely point for a second entry on this trade. We got stop loss to entry, meaning the first trade is risk free. We have no risk into the market. So if it comes back, we're at break even or 0, or if it hits TP, we're obviously up 5%. And we can set another trade in there with a decent size stop loss. So then that means it's a win-win. But because of the timings, and we don't like holding new trades over the weekend because you can have gap outs just like that there. That was Sunday 10 p.m. open. Price gapped out there just because of whatever happened over the weekend. You would have got taken out of the trade. So that's what we don't want to do. So price itself, we didn't take the entry, but we could have done. And that entry would have roughly looked something like this. That was there. That was your engulfing candle. We would have gone from there. So we would have gone about 30 pips to match with the other trade itself. And away we go. That would have had the same TP as the first trade. And we would have run that right up like that. Very good thing to have. That's why the MSB and MSBC work so well together, because we can catch 2 trades from one piece of market structure. Price then decided to push up as we was expecting and would have been in a profitable trade by now. But because of the timings and the way the strategy works, we did not enter on the second entry. So price currently now is in a little bit of a movement. Price has just pushed up and we've now got a bit of a high test candle forming at the minute. So price could either way at the minute. We could either get another push up to create a new higher high, and that would look something like this. So prices give a first push, little pullback, and a bigger push up here, taking out these highs and then hopefully taking out the previous high first of all before then pulling back and going up. Or what price could do, which would be another bonus for us, is now to push from here back down to the 4-hour 50. We have a bit of a double rejection and then we can catch another trade all the way up and catch a second entry trade as we did on Friday. So that's what we're looking at for the rest of the week on this setup and how this is working. Get rid of them. We want to get rid of them. No, it doesn't want me to get rid of them. Anyway, that is not relevant. So that is why we entered the trade itself, and that's a breakdown of the Eurusd trade, which is live. Did add this into the community itself once I placed the trade, so the other members can have that if they want to, and all the data is there leading up to that, but we do not offer any sort of signals. It is just the trades that I will be placing added into time frame. You can alter your own stop losses and stuff to that. I will just say I've entered this trade 10 minutes ago or 5 minutes ago. This is the setup I looked at. You can take it if you want to. That's what we're after. So you can do your own calculations. I don't give you your calculations. But that's the way the setup is for us and how the MSBC B and BC trades work. So again, as I've said previously in the video, you can use the link in the description and that will take you straight over to Limitless Trading Club, which is completely free. And that would just be another breakdown on the Eurusd trade. So now you've watched to the end of the video. If you want to place trades like the Eurusd setup you have just seen, head over to limitlesstradingclub.com or the link in the description and you can access everything for free. And I mean everything.